So I think we have people joining in. Till then, we can get to know the audience a little better. So Kushi and Vaishnavi, why don't you start?
So hi everyone, I hope all of you are doing great. Myself Kushi and I am a second year undergrad at IIT Delhi. So while we are waiting, let's know our audience. So if any of you like to introduce yourself, you can.
Like, are most of you from tech backgrounds, or do you have any interest in finance, or are you actually pursuing finance? If you could like put it in the chat box so that we can get to know you a little better.
Sami, Prabhat, Vidya, Tanya, please tell us about yourself a bit.
Guys, you can interact with us.
We don't bite.
Exactly.
Nice to see Vaishnavi, Kushi here. I think this is the first time that you're running a program. Is that right, Aditi?
Yeah.
Absolutely.
Yeah.
I mean, they reached out, they wanted to moderate today's session, and it's so great to have their energy here. So
absolutely. No, very happy, very happy. I am going to use the new backdrop, and I am going to just come on video. And thank you very much, Chanchal. Very excited to have you at Aspire for Her.
In fact, I should thank you. It's a great platform that y'all have built. Last when I met Ruchita, I was so excited to hear about the interesting stuff that y'all have done.
Right.
It's great to see so many people joined on the community, and the stuff that y'all are doing is awesome. So yeah, I'm so excited for this.
No, same here, same here. And we hope to see more and more of you, as you sort of get to see our platform a little more. We started about 2.5 years ago, and career previews is what we love doing, because we feel that if she can see it, she can be it.
Right.
And that's exactly what you're doing today. So you are going to be talking about the careers in finance. So I'm also very looking forward to that discussion. My virtual background is what I'm looking for.
Madhura ma'am, it will be great if you talk a little bit about Aspire for our community and its initiative.
Of course, if you want me to, yes, I will.
Yes.
I will. Perfect. Here, I've got this lovely background. I love this color-coded one.
Right.
So do you want me to get started now? I'm happy to do that.
Yes, ma'am, please.
Okay, I wasn't planning to talk today, but thank you so much, Vaishnavi and Kushi, for coming here for the first time and doing the session. Thank you so much, for coming here, Chanchal, to talk about your experiences. What we like doing at Aspire for Her is to get newer members in our community, spread the word, and tell them about what we are truly trying to achieve. Most of you know the Aspire for Her story. We started it about 2.5 years ago on Women's Day 2020. The real reason for setting up Aspire for Her was that India was really at the bottom in terms of economic participation of women. And that's such a important part of discussion, even in the context of discussion that we're having today. Many women earn, but yet they are not financially independent. They hand over their earnings to somebody else in the family, and they let them take those financial decisions, which later impact their lives. Something like COVID happens, and that happened as soon as we set up Aspire for Her, in fact. Suddenly we realized that there are so many women who are emotionally very disturbed because they have obviously lost a very dear person, but financially also they're completely insecure because they simply do not know. So there's a lot of other interesting stuff that we're going to talk about financial literacy and women, because women's relationship with money has always been fraught with uncertainty, fear, not love. And I think that's what we are trying to build in what we're going to do over the next few weeks, and stay tuned for that. But today we're going to talk about the other side. Chanchal is going to talk about the other side, and she's going to talk about women in finance and what amazing careers that finance can actually provide to so many women. And because not only because it's a great career choice, and I can say that with confidence because I have had a career in finance for 25 years. I would not have done it had it not been a hugely enjoyable ride. So it is fulfilling, it is enjoyable, and it has so much of variety. I mean, right from, I'm sure Chanchal is going to talk about that, right from banking to financial services to investments to insurance to mutual funds, to regulatory. The whole world is out there. There are so many kinds of career choices, and I am hoping that some of you will discover a few of those career choices in the course of the conversation today, and look at those kind of careers that you can pick up, you can dabble in, you can perhaps just sort of look at even as a side hustle. So there are amazing career choices, great careers for women, and finance is the place to be in, and definitely the precursor of the great work that we are about to embark on, great journey that we're about to embark on in terms of providing financial literacy for every woman in this country, starting with our community. So thank you very much. Very proud to have three very new faces who are going to be the face of Aspire for Her today, Vaishnavi, Kushi, and of course, Chanchal, and look forward to the discussion. Thank you.
Before we move ahead, I'd like to add something. And I'm talking it out of experience that anybody who's in finance is really passionate. In my family, it's my husband, it is my son. And those who are into finance are really passionate. And those who are not like me really don't know about it. So Chanchal, I'm really looking forward to this session to get started, because every time I end a session, my husband asks me, okay, so what is the next stage? And I just go blank there. So here I am looking forward to having an answer today. Thank you.
No pressure, Chanchal, okay?
Like I said, I'm so excited and I have so many things in mind. I'm just trying to, cull my things. Okay, what do I talk? How do I put it across in the most simplistic yet effectful manner? So yeah, I mean, let's see how it goes. And in fact, you shared a story, Madhura, it just recollected something. Little background about me, and of course, I'm sure Aditi will give a brief background. I did my CA, then I did my CFA. The whole idea of doing this was to be in the finance industry, right? Until 1 year ago, my portfolio was managed by my husband. He's an MBA from a tier 2 college, right? So it's not about knowing the subject, or it's just confidence. I think it's just confidence, just nothing else. So a little bit of my stories I'll try and put somewhere so that it's more meaningful, people can connect to what we are saying, and yeah, look forward.
Amazing. Looking forward, Chanchal.
Great. So to have a career in finance, you need understanding at various principles like consistency, timeliness, justification. That's just the intro. Let's learn from the start itself. Now, I would like to hand over to Vaishnavi to give a brief intro about them.
So now I'll be introducing our speaker for today. We have Chanchal Agarwal with us. She has about 12 years of industry experience spanning across various verticals like the family office, investment advisory, equity management, investment banking, etc. She, as a young chartered accountant and CFA charter holder, her focus was always on interpreting beyond numbers and joining dots to understand the holistic perspective. In 2020, AIWMI recognized her amongst the top 100 women in finance. And she also had the opportunity to be featured in the audio talk series Show Me the Money by Meghna Pant, which is available on Audible Suno. And her article, reflecting on what stops women from investing, was published in the Hindu newspaper. We are really excited to welcome you, Chanchal. Please I'll hand over it to you to interact with our audience.
Amazing. So I am so excited to be a part of this amazing group. Um, of course, there's this nice introduction that Vaishnavi has given, a quick one. So when I started off, when I started off my career, all of us, either from the commerce background, would want to do something in finance, right? We just know finance. At the most, we know these fancy words, which is you want to be an investment banker, you want to trade in shares, and we see these fancy looking charts, and we said, even we want these 4, 5, 6 screens, and we want to be a trader, we want to be punching something and earn lot of money and multiply our money. Over a point of time, I realized finance is much beyond that. That is just not even 2-3% of what actually are the opportunities in this stream for people. I am going to share my screen. Yeah, perfect. I guess it's visible to all.
Yes.
Yes, it's visible.
So when you talk about finance, let's understand the background of the country that you are in, right? Because that's most important. First, you have to understand, do you have the necessary infrastructure in place to excel in a field, or to develop a career in the field? So where is India? Where are we as Indians, right? From the fourth largest in terms of wealth, we have overtaken France, and now we are the third largest wealth country, right? We are just beyond US and China. Now, of course, that a large portion is because of the population, right? The more the population, the more the wealth you will have, right? So a significant factor of this is, of course, you have a large population, but let's look at what our people have done. You have this lady called from Nika, Falguni Nair, who's now India's self-made richest woman, right? So there are a lot of opportunities that she's opened for women like her. Last year, India did 60 new IPOs, right? So we have raised 15.6 billion. Now that's a very big number, right? Of course, all of us have heard or looked at memes from Adani Group, right? Gautam Adani being the second largest or third largest station, and so on and so forth. But let's look at this number. He has added 40 billion to his fortune last year, making him the second richest person in Asia, right? So the second richest person in Asia is from India. We had the vaccine getting developed last year, right? So there was a lot of money that flowed into that particular sector. If you have to compare the performance, right? Finance is all about numbers. We look at performance. Is it positive? Is it negative? How are we compared to the peers, etc., right? So let's talk about performance, because this is one metric that is very important. If you had to compare India's performance to other jurisdictions, we were the only country other than Switzerland who was able to save or retain money, right? So there was 415 billion at the start of the year. At the end of the year, there was 410 billion that our wealth billionaires had, right? So we were more or less able to save the capital loss. Do you know what was the figures in the most developed countries like US? A 60-40 portfolio, right? All of us would have heard of a 60-40 portfolio. Put 60% into equity, 40% into bonds, and this is a nice portfolio. When the stocks fall, bonds will save you. When the bonds are not performing, or when the bonds are stagnant, equity will save you, right? A lot of wealth managers or slash brokers would have told us this. There are portfolios who have lost as high as 30 to 40% in a country like United States last year. And this 30 to 40% is a 60-40 bond portfolio, right? So you have a nice balanced portfolio, you have invested your money into the market. So let's assume you are a new investor last year. At the start of the year, you put 100 rupees in the market, and the end of the year your portfolio is 60 bucks in USA, correct? So the point is, I'm not trying to demean a country like USA. All I'm trying to put here is India has a lot of opportunity ahead. With the whole US-China equation, we don't know when, if at all, China is going to attack Taiwan. Will people or will countries like Europe Europe, US would want to invest into China? I don't know. Big question. Russia is out of the game. I don't know. So from an investment perspective, when I say investment, which means foreign capital, right? The money has to be invested somewhere, right? All of us save our salary, all of us save our income, right? The money has to be invested somewhere to get that return. So the money will flow to some jurisdiction. The point that I'm trying to make here is this equation now is very well balanced in favor of India. What happens when this equation is balanced in favor of India? How does it affect? Why are we even talking this? The session is supposed to be careers in finance, right? Why am I talking about India over here? Why am I not talking about careers? Look at this. When money flowed to US, when US was the investment jurisdiction, look at the amount of finance jobs, look at the amount of opportunities in finance that arose in that country. So the simple statistics is I am just trying to replicate the same scenario and I'm trying to build a case over here that look, our neighboring countries are facing some sort of crisis, whatever that crisis could be. India could benefit because, well, China is no more producing stuff. China has kind of had not so good relationships with US, right? So being it's there's this saying in Hindi which says andhe mein kana raja, right? So India is trying to be in the forefront or be the beneficiary of this whole situation, right? When I was just preparing this presentation, I had to take few cues, right? I mean, who has done so big? I mean, uh, of course, you have, when you talk about finance, you have a lot of males, a lot of males that you can talk about. You can talk about Uday Kotak, Uday Kotak has developed Kotak. There's IFL people have developed, ICICI is so big, etc., etc., etc. But when I was trying to find some cues of a woman who's done amazing job in our industry, I came across this particular profile, right? So there's this particular lady who started her career somewhere around in 1980s, in the same sector, and she got elevated across different levels because of her passion, because of her dedication. Now, I mean, of course there is something happening around now, but because of her passion, in 2009 she was elevated as the CEO of that particular concern, right? So from 1984 till 2007 she jumped all the way back to be a CEO of this particular beautiful company. So who is this lady? Miss Chanda Kochar. Of course, there are some stories going around her, but neglecting that part, what she's done is a phenomenal job, right? Of exceeding in her career, right? So if there are people like her, that does not mean that finance is only a world of men, and I can tell you it is. We are used to these attending these seminars, conferences, etc. Let me tell you, if the audience is of 100 people, I will not find, I mean, hand on my heart, I will not find more than 7 to 8 women in that entire crowd. Not more than 7 to 8. So this is really surprising, and sometimes it gets very, uh, it's not a nice feeling, right? When there are so many men, why aren't women being a part of this? I mean, there's nothing different. This is not rocket science, and women, in fact, have are into rocket science. So I don't know why. What stops us? What stops us? These are other numbers, because as women we are nurturers, right? We are mothers, we are sisters, so we have this caring ability where we let the men of the house, and we let the men of the house take care of the numbers, and we take care of things which are more nurturing, right? That's our basic that's how God made us. So of course, I'm not going to talk about careers in finance for women. I'll just drop the women part. And today I'm going to talk about interesting career opportunities that all of us can look at, right? Now, finance is numbers, right? But let me just break it down into four peculiar industries or four peculiar sectors that you can look at. One is managerial finance, right? You work in the finance function of a company, either as a CFO or as a capital budgeting analyst, as a manager, financial analyst. So basically, there you are dealing with numbers. You're taking care of say the inventory management or the working capital management, or taking care of the accounts function, the auditing function, right? So this is more managerial, where you're managing a particular company's concerns, finances, right? The second is finance service industry, which most of us are now linked to, right? So you have financial product. For example, a mutual fund is a financial product. A bond is a financial product. A fixed deposit is also a financial product, right? So you are into a business of either buying, selling, advising on these financial securities, as we call it, right? So this is the second domain that we have. So you have investment banker, you have a securities analyst, you have a stockbroker, a financial planner like me. So this is the second industry where you are into financial services industry. Correct? Of course, then there is real estate, which is the third part of not technically a finance background, but you could have somebody like a mortgage banker, a real estate lender, agent, real estate valuer, etc. And the fourth one is insurance, right? All of us would have grown hearing LIC. Uh, I'm sure a lot of our parents, etc., would have subscribed to those LIC, money back securities and schemes and so on and so forth. Right. So there's the the LIC Valley uncle, how we call it, who used to come and advise our parents on that securities. So those guys are called insurance agents slash brokers. Then you have insurance actuaries, you have risk managers, etc. So I'm going to take these up towards later part of my presentation. But broadly, these are the four categories of careers in finance that we can look at. So in this slide, I try to put across all particular options, all particular service areas that we can look at. So a career in finance does not mean money. Does not mean managing money all the time, right? It's multi-phase. There are lots and lots of things that you can be involved with, right? There's something called as valuation, right? So you could be on the valuation side, where your work is to value and assign a particular multiple or a particular number to a particular company that you are looking at, right? You could be on the due diligence side, where your work is to look at a company and to analyze the financials and notes and etc. and give your comments. So that could be as a chartered accountant, or that could be as a due diligence analyst, and so on and so forth. You could be on managing money side, right? So you could be a part of asset management company. So what is an asset management company? Something like a mutual fund, right? I assume all of us know what a mutual fund is, right? So you could be a part of mutual fund team, where as a fund manager or as a manager of money, your work is to take money from people and invest into securities or stocks or whatever the theme that is of a particular fund. You take money and you invest into those schemes, right? So you are a portfolio manager. You could be an investment banker, where you kind of speak to companies who wants to raise money, and then you either help them through an IPO process or through the different rights issue and so on and so forth, right? So each of this, I have tried to cover maximum of these in my coming slides. We'll try and discuss a couple of interesting ones, couple of new opportunities that have joined. There is one interesting thing that has come up now, or which is spoken about a lot now, P2P lending. That is not a part of this slide, but I wanted to speak a little about that, because generally it's one vertical that people don't talk about a lot now, but that is one vertical which is giving a tough competition to banks. You would be at different levels. I mean, of course, the whole idea of this chart was we started at entry level. We call ourselves, financial analysts or business analysts or reporting managers, etc., etc. Moving all the way to CEOs, CFOs, etc. Right? So these are the particular typical career paths that you face. So I'll quickly start with the opportunities or the areas that you can work on it. Investment banker. all of us wanted to be an investment banker, right? As kids, if we were told what do you want to be, we wanted to be an investment banker. Reason being, uh, those are supposed to be smart people. They wear prim prom clothes. They look very, I mean, steady, neat, and all. And it's assumed that investment bankers are the ones that earn a lot of money and then have a lavish lifestyle, etc. Of course, all that is true. All that is completely true. But what do they do? Who is an investment banker? I mean, what is it that they do for a living, right? So companies, right? A typical company would have financing needs, right? They would want money for different purposes. They would either go to a bank or ask for money and give that rate of interest or whatever that is, or they'll go to an NBFC or they'll go to a private lender, right? This is historically how people used to, gather money to take care of their businesses. The other way of doing it is the equity way, right? Where you go to public market and you say that, look, I'm going to, I'm going to list my company. These are the equity shares of my company, and I make you equal partner. I take you as shareholder in my company. So investment bankers are, in the most layman terms, investment bankers are nothing but the brokers. They speak to companies, they organize their financials, they get they do a book building, they speak to people in the market, they help companies with their IPO slash financing slash merger activities. So they are in a sense involved in the fund manager of fundraising activities, right, where they help company raise funds in order to take care of their whatever exercise capex or working capital or whatever it is, right? So those are investment bankers. Very, very layman term, and uh, the easiest that could come to my mind, right? So you in investment banking, you have a lot of options that you can look at, right? So you could be on the sales desk. So what does a sales guy do? He will his job would be to talk to these companies, figure out if they have financing needs, figure out if what are the broad level valuations that a company is looking for, how much money the company is looking to raise, and then of course get back to his desk, research desk. A research desk work would be to work on the company's financial, look if the valuation on the money that company is asking for is justifiable, etc. And of course from there you go on and you speak to you speak to these clients, you get on to the IPO stage and so on and so forth, book building. So we leave the technical part. In simplistic terms, investment banker is nobody who helps you raise money from the market, right? And then there are different small verticals. So from research to a trading desk who will help you buy and sell those securities, to a sales desk who would try and build those relations. These are the typical circle of people involved. I have also written private wealth because in our industry, private wealth is somehow uh, told to be in the investment banking vertical. But let's skip this because I have a separate slide on the entire financial planning and wealth exercise. To my understanding, private wealth and is not an investment banking activity. But yeah, it's for some reason included here, right? So we've covered investment banking. Simple. The idea of investment banker is to help you raise money, right? Asset management. Yeah, this is what we do for a living. So asset management, research, hedge funds. What are asset managers? Who are asset managers? Asset managers are nobody who are but are people who manage your assets. Your assets are your cash, your investments, right? So an asset manager is somebody like a mutual fund, like a hedge fund, who would take money from you and who would invest in on your behalf into different securities, into different stocks, etc., etc., etc. Typically, there are two sides to it. So one typical asset managers deal with stocks, equity stocks, listed equity stocks, or listed bonds in the market, right? Of course, there are different derivative options, etc. I'll skip that part for now. Let's keep it simple. So let's understand they deal with equity shares of a company and they deal with listed bonds of a company, right? Those are asset managers. Who are asset managers? You have your mutual funds who deal in listed equity and bonds. Then you would have hedge funds Hedge funds are a little more aggressive, or supposed to be a little more aggressive than mutual funds in terms of generating returns. So they will, along with shares, they might deal with futures, and they might deal with in options, a couple of derivatives, etc., etc. Right? Insurance companies, right? So insurance companies where you pay a particular premium, and this is for typical, money back insurance companies. You pay out particular premium, and they would invest on your behalf, and then they would, as promised, depending on what your policy is, they give you back that money, right? So they are also asset managers. Pension funds, right? Most of our parents would have these pension schemes, etc., where there is a particular amount that gets deducted from the salary or is paid by the employer into this pension fund, and that after retirement, or depending on what the scheme is, that's paid back to the beneficiary, right? So these pension funds are also asset managers, because during the life of the pension, they're supposed to invest money. So the corpus that they have collected, they're supposed to invest that and generate that return, right? So investment banker was somebody who helps you raise money. Asset manager is somebody who will manage your money, who will invest on your behalf into different various options, right? In the most simplistic form. Now, in the asset management also, there is something called as sell side, and there is something called as buy side. Without getting into the nitty-gritties of it, what is a sell side? A sell side is somebody who will give you research on stocks, right? So I mean, let's assume, for example, an Axis Capital. And Axis Capital is a sell side analyst, which will give research to their clients. Who are their clients? Their clients are mutual funds, PMSs, etc., etc. So all these hedge funds, insurance companies, pension funds, etc., etc., are clients to this sell side. A sell side would say, look, for example, look, I've done these detailed research on ITC and I like the stock. So why don't you look at it? So these mutual funds, pension funds, etc., will take this research from these sell side people, look at it, and then invest on clients' behalf. Right? So they are in some way service agents to these buy side people, right? Mutual funds, etc., are buy side, right? Because they take money from their client and they invest into these securities, right? So that is called buy side. When you're facing the client, when you're investing on behalf of the client, that is buy side. When you're providing research or providing service to a particular organization, entity, etc., that is sell side, right? Just a very brief on what buy side and sell side is, because our industry, asset management industry, it's very important to understand what a buy side or a sell side is, and basis that you can choose whether you want to be on the buy side or whether you want to be on the sell side. Right? Global investing, I will quickly run through it because this is something that is developing in India, and 5 years down the line, we will not talk about mutual funds in detail. We will always talk about global investing. India investing is done, but tell me, can I invest into US? Or I want to buy European financials, because I think Europe is going to get out of crisis. So India banks are done. I want to buy Europe financials. Or tell me, can I invest into China sitting in India? I don't want to use the mutual fund route, but I want to directly invest into China, right? There are a lot of such options available to Indians right now. Sitting in India, you can have your demat account and invest into global opportunities just by few clicks, right? It is so easy to transfer money to offshore jurisdiction. It is so easy to open your US bank account. It is so easy to open your demat account. Trading in ETFs, stocks, etc. It's very, very cheap in such jurisdictions. So I just wanted to give a glimpse. This is something that has started. In fact, providers like BSC, which is Bombay Stock Exchange, is providing membership to brokers who would want to provide their clients offshore trading activities. So more on this, I mean, I just wanted to give a glimpse, but this is one area. If there are finance enthusiasts, students over here, keep this in mind whenever you all are choosing your career options. There are options like AI. There are options like cyber security. AI in India, of course, is getting developed, and assuming couple of our audience is from Bangalore. Those guys are doing amazing job in AI. But as a normal resident Indian or a resident investor, I'm a retail investor. Can I invest into an AI in India? No, I can't, because there's a basic minimum. AI is only available for private equity people. I don't have a crore to invest into private equity. So how do I invest into AI? Unfortunately, no, in India you can't. But in US, you have ETFs which allow you to invest into AI, which allow you to invest into cybersecurity, which allow you to invest into something called as pet care. So there is this interesting theory which says that in US, 7 of 10 couples prefer having pets. 3 on 10 couples prefer having kids as the third member of their family, right? So there are lots and lots of options available on the global investing space. Keep a tab, because I believe the space is going to grow much, much larger from here. Private equity, VC. This sounds very, very awesome, right? Again, a private equity people, VC people are the most respected people because they invest into unconventional ideas. So let's go 2 steps back. We spoke about asset managers, right? And you would have heard whenever I spoke about asset managers, I was repeating listed, right? At every point, I was telling you they invest into liquid listed securities, they invest into listed bonds, etc. So asset managers, quote unquote, deal with listed securities, right? Where it is easy to sell, and sometimes it's easy to exit a particular opportunity. There is liquidity. In our industry, we call it liquidity. When it's easy to exit a particular investment, how liquid that investment is, how quickly you can convert that particular asset into cash, right? That's liquidity. Private equity gives you higher returns because you invest into unconventional ideas. And I just spoke about AI a couple of minutes back. So let's assume I want to invest into nice AI opportunity around there, and I don't really need capital. I mean, I don't need money in the next, say, 5, 7, 10 years. But I need a multi-bagger return. I'm pretty sure of that. And I'm pretty sure and pretty optimistic of this AI area coming in. I could be a private equity investor. What I do as an investor, so what I would do is I'll just give my money to this private equity fund. A fund would be, a combination of people, and I'll tell them that, look, you invest on my behalf, but I want double-digit return. I'm ready to wait for 7, 10 years, but I want, I want a handsome return. They would take my money, and then they would invest into these unlisted companies, these startups, right? We've heard of the name startups. They would take my money, they would invest into startups, to companies which are at seed capital, series A, etc., etc. They would put money there, they would wait for the company to grow, and then they would exit from their company. Very simple, right? So an asset manager would take your money and invest into listed ideas, typically very liquid. You can get in, get out anytime. A private equity guy will also take in your money, but invest into unlisted startups, unlisted securities. But wait, you'll have to hold and keep patience. That's the broad level difference between the two. But how do I exit? Now, typically, a private equity exit, how would I exit? Typically, they will sell the stake to some other company, or there is another strategic buyer who's keen to invest and take their stake, or there is an IPO, right? So typically, this is the way exits are happening. But that all said and done, what about the careers? What are the careers that you can look at in private equity VC space? One, you could be an analyst. So what would an analyst do? Whenever there's an opportunity on the table, right? So I mean, as a broker, or I have this startup, I will come to you and I'll say that, look, my startup needs 5 crore. And I'm sure, couple of us would have seen Shark Tanks, right? You've seen Shark Tanks. Shark Tanks are nothing, but those are, those are investing private equity monies into these companies, right? So let's think of a Shark Tank where I come to you, you're a fund, and I tell you, like, look, I need this money, and look, my business is so good and things are so good, and then the next 5 years I'm going to grow 2x, 3x, 5x, whatever the number is, right? You would evaluate my company, you would do a thorough diligence on my company, and if you like the opportunity, you cut a check, and then you would invest into my company. That's how. So when I said diligence, typically there are research analysts who would do a diligence on the company, who would look at the financials, the MICs, the past history. Do a little bit research on the market standing of the company. Do a little bit research on what the product the company has. Does it have a market appeal or no? Then there's a separate team which will look at legal, tax, etc. due diligence. Right? So this is one area that you can look at, which is research analyst. Second, you could, of course, be a fund manager where there is a listed, there's a series of research analysts report into you, and you take the final call whether or not you would want to invest into a particular company, right, in your fund. That's, of course, as you elevate to the doors. Of course, there are many options, jobs like, you could be an on the accounting front of a fund. You could be in operations part of the fund, or you could be on the sales side as well, where so this fund is supposed to raise money, right? So what is a fund? A fund raises money from the market and then would deploy into these companies or startups or something, right? So you could be on the sales side where you talk to people, talk to investors and say that, look, we have this amazing fund, we have this amazing fund manager, we have this amazing team, so why don't you invest into us, right? So you could be the sales part of the organization, right? Very simplistic term, this is what a private equity would be like. Corporate finance, right? This is also one second most spoken word about after investment banking, right? So what is a corporate finance supposed to be like? What are you typically dealing with? In a sense, you're again dealing with money, right? So you would evaluate. So let's assume you're a part of a company as a research analyst. You would look at different business models of the company. You would evaluate if there are investing opportunities available for the company. Is there an option for the company to expand or acquire a particular smaller company? You would do diligence on that. You would look at the capital structure, that should I raise more equity, or should I buy back my equity? Should I raise more debt, or should I repay my debt? Those decisions. You'll do the risk management of the entire financials of the company. Right? So that's broadly what a corporate finance would look like. Of course, there are treasury functions where you're the treasury manager of the company. You take care of the entire cash flow plan, right? Let's assume I'm a company. I have 100 crores. So as a treasury manager, I will decide that, of this 100 crore, maybe I need 20 crore for capex. So let me put it in an instrument that gives me money immediately. But balance of this, maybe 40 crore is something that I don't need maybe in the next 3 years. So let me put it in something which gives me a better yield, which gives me a better return, right? So that's in very short form, a treasury manager. That's what a treasury manager is supposed to do. Of course, the CFO office, you could work with the CFO and help him out with his decisions of the company, and at some point elevate to be the CFO yourself of a company. There are investor relations team, right? So what an investor relation team does is they interact with the analyst, so outside analysts. So there are sell side analysts, right? I spoke about sell side analysts couple of minutes back. So they would interact with the sell side analysts. They would give the quarterly presentation to the market. They will resolve the investor queries, etc. So could be a part of that, and of course audit. A couple of us who are from the CA background could be an internal, external auditor through the company, right? You could take care of the pricing part of your product, right? How well my product should be priced in the market, what should be the volume, what should be the pricing, what are the competitor doing, etc., etc. Right? So in a very nutshell, these are the couple of options that you can look at from the from the corporate finance side. Now, at the start of my discussion, I said that this is one area I really want to talk about is P2P lending. So tell me something, whenever our parents or ancestors wanted money for business or for any personal activities, banks were something that were not really appreciated. So if I just need money for say 3-6 months, typically the tendency is people would not go to a bank. They will either call in a friend, call in a relative, call in anybody that they know of, I mean closer, and they said that, look, I need this money and I'll give you this particular interest and I'll return your money in this particular time, right? So what was that? what was that activity called? That was P2P, person to person lending, where me as a person, I know you as a person, and I give you that money with the assurance that you will repay me back this money with this particular rate of interest, whatever it is decided. But we have seen instances where there was a lot of bad debts happening, and we've heard our parents and grandparents talk about that. They had lent this particular money, but that didn't come back. Relations got spoiled, families got spoiled, etc., etc. So, how do you still retain the crux of this person-to-person lending, but still make it into a format which gives you less bad debts, right? Which still gives you a larger assurance of the money coming back. So what these platforms are, what these platforms do is it's more like an Uber of so how a Uber platform works, right? It will connect the drivers to the people who would want to avail services, right? So similar way a P2P works, where it would connect people who would want to borrow money with the people who would want to lend money. And I'll give you an example. Let's assume I have a surplus of 1 lakh. And I'm okay taking that risk. I'm okay. I understand that, this is really risky because there's no security. My money could go anywhere, but it's okay because, they're giving me this 10, 12% and highly lucrative double-digit returns. So what I do is I enroll on this P2P or person-to-person platform, and I give them my 1 lakh, but I tell them that, give it to many people. So what they would do is they'll just break it up and they'll give 5,000 to 20 people, right? So that cuts down my risk. I still, instead of the completely relying on the whims and fancies of just one particular person, here I have so many people, right? So even if one of them had to go bust and not repay my money or pay half of my money, I still have a larger surplus coming back as a whole, right? So this was the whole concept with which P2P lending came into picture, where borrowers sign up, they request for a loan, and this could be very short-term loan. This could be an educational loan, could be a loan for a wedding, could be a loan for a holiday, could be a loan for doing up your house, stuff like that. And then you match up the request to an investor who's okay giving that money, right? And this is all system built, right? So you have thousands of such loans coming in, thousands of such investors and borrowers on the platform, right? This is how they have digitalized the whole person to person lending. And I mean, why am I talking about this? Because there is a lot of opportunity that is available in this particular field to grow. Either on the sales side, where you talk to these investors, wealth managers to onboard their clients on the platform as the lender, to working on the interest rate mechanism, to working on the back end, where you determine whether it would make sense. Are your bad debts increasing? How do you reduce the bad debts? How do you control the credit of the company? How do you take care of the collection agents, etc.? So there is just lots developing on this front, and along with global investing, we think P2P lending is something which is going to be the next gen finance, right? So along with conventional asset managers and investment bankers, etc., these are the couple of themes that you could keep a tab on, and yeah, look out for opportunities there. Yes, so finally we get on to my work. This is what I do. So what is our forte? So we are wealth advisors, we are wealth managers, so we are financial advisors. You want to put it, we are single family, no, we have multi-family office, etc. So what we do is we just talk. Our work is to talk. So what we do tell people is, look, you have, let's assume you have 1 lakh of your corpus. So, you should just put, say, 20-30% of it into equity mutual funds, which give you liquidity, but upside. 20% you should put into debt mutual funds, which gives you a downside protection. 10% maybe you should put it into private equity, which gives you that upside exposure. 10% maybe you should put it into global investing, which gives you geographical diversification. 10% you must put it into P2P lending, which gives you that extra IRR or extra return, right? So we are more of accumulators of all the finance products. Our work is to to look at all investment opportunities that are available in the market, to advise the client, to tell him how you should plan your portfolio. How do you, everybody has a goal, right? So my goal would be, to plan for kids education, for a holiday. I want to, save my surplus for a holiday, for retirement, etc. So depending on what the client is, what the needs are, and what is the money that client earns, what is the surplus that client has, advise those clients with their portfolio, right? So this is a typical wealth manager. Or like, of course, there are different levels. You could be an analyst on the research side, like how I am, where you look at these portfolio and all your work is to just tell the salespeople on how they should plan their client's portfolio. Or you could be on the sales side, where your work is on pitching. You go and meet people, you go and meet clients, and you tell them that, look, we are doing this is great work. Why don't you take our advice, and we'll help you investing, and we'll help you to generate better, or we help you invest in good products. Let me put it that way. So that's on the sales side. Broadly, these two. Of course, there is operations bit as well, where there's an operations team who would take care of the back end, who would take care of the entire paperwork, client reporting, etc. Couple of names that I have put on the slide. These are a couple of the non-bank, good big wealth managers that you all can look at. Yeah, that's largely what wealth management industry is. Of course, last part is risk management. None of the aspects in finance is complete without risk management, without understanding what your risks are and how do you balance a risk. Be it an asset manager, be it a financial planner, risk mitigation is one of the most important keys when you develop that. In fact, for a couple of aspirants over here, if you want to get deep into risk, you can maybe look at FRM, which is a course provided by CF Institute. Or if you want to get into derivatives, into professional risk management, you can get there. Most of the fund houses have their own risk team, right? So a mutual fund like HDFC, SBI, etc., will have an in-house risk team that would take care of the risk levels, not only of a particular scheme, but of the entire fund house, right? How are the securities moving? Are we investing too much into a particular bond or a particular paper? If there's a negative news around a particular paper, how will it affect the entire liquidity of the fund? So they have these frequent risk control mechanism in the place that they run. Yeah. Of course, I found this slide interesting. I don't know how much to agree to this, but this is more for people who want to understand, okay, how much of my job will involve travel, what is my desk time, what are the typical hours, will I speak to clients, will I not speak to clients, will I have exposure to seniors, or it's more of, just me talking to my colleagues. So I found this interesting chart online, and I have just put it across on my slide saying that, no, look, first you define your goals. What do you want? If you want a job which involves high travel, get into sales. Sales is the only thing which will make you travel and a lot, right? But if you don't like traveling, but you're okay with a high desk time, you love numbers. If you want to do, if you just love looking at numbers and analyzing that, maybe you can get on the research side as an investment banker, etc. So yeah, this is something that I found really interesting and I wanted to put across. And yes, thank you. I tried to cover as much as I could. The subject is such that this is so much to share, and there's so much to know and learn. So at every point, both you and me are learning, and we're just building up and learning our skills across it. If there's a particular question that I can answer, happy to discuss that part, and I hope I have covered some bit of it. The only takeaway, and if at all you have to, and don't forget whatever I said for the past 1 hour, let's just erase it. The only thing that you need to excel in this particular field is just confidence, nothing else. Does not matter if you don't remember numbers. If you think you're somebody who's goofy with numbers, or would not understand, or quickly remember the difference between 10 million and 100 million and 100 billion and all, does not matter. It's only the confidence that honestly matters. And yeah, you can just get going from there. So I'll take a pause here, and I'll let others talk.
Thank you so much, ma'am. It was really a very informative session. So now it's time for the exciting announcement. I would like Aditi to tell everyone about it.
First off, thank you, Chanchal, for like such a detailed session on the entire opportunities available, and especially, the fun part, which is what does it involve more travel? Does it not involve more travel? I actually took a screenshot of that slide, just to like refer to it at some point in time. But it was a very informative session. So thank you so much for it. And just for all the people here, tomorrow we have a session with Spotify, which is going to be exciting in itself, and it's for everyone here, even for you, Chanchal, because the session is related to podcasts. And right, and they are pushing more women to get into podcasting, which is why tomorrow's session is really important, because we're also going to launch a very interesting competition tomorrow related in collaboration with Spotify. So do tune in and get the links and join in. Other than that, let's move on to the question and answer. Um, if any of you have any questions, please raise your hand and then you can speak it out.
There are some questions in the chat. Tithanya.
Okay, I will take it up. So what is a due diligence? The first question is, I think that's correct. So as a due diligence analyst, my work is, so let's assume we are only talking about finance due diligence here, right? Whenever I am buying a company, right? So as an investor, if I'm investing into a particular company, I need to know the financials of that company, right? They could be fabricated. They could fabricate the numbers to me. They could fabricate the future to me. They could fabricate their progress to me. So what a financial due diligence analyst would do is they would thoroughly study the financials. They would thoroughly look at the tax returns. They would thoroughly look at the volume numbers and see that if the numbers that company is giving for a particular valuation. So when is a due diligence done? A due diligence is done typically when you're investing into the company, right? So in a mergers and acquisition scenario, or in an IPO scenario, or in a private equity where a private equity is investing to a company, what a private equity would do is they would just hire an outside analyst. Typically these are CA firms that are hired, and tell them that why don't you look at the financials of this company? Why don't you look at the notes to accounts of this company and highlight any risk that I should be aware of? So a CA would look at the financials, look if the numbers look in audit in proper. They would look at match up the numbers with the bills of the company. They would look at the notes to accounts. They would look at the contingent liability. They would look at if there are tax orders, etc., pending on the company, and highlight it back to the private equity firm. Why it is important? Because in private equity, you're paying a particular number. Let's assume you're paying 100 crore to buy a company. You should be very sure that is the company worth 100 crore, or is there a contingent liability of 10 crore which is pending on the company, which would fall back on my head, and maybe instead of 100 I should pay him 90, right? So due diligence is more of a risk process where these agents analyze the risk of a particular company and they highlight it. Typically taken care. So the finance due diligence is taken care by chartered accountants mostly. Of course, beyond that, there you have a tax due diligence, which is again by the chartered accountants or tax practitioners. There is a legal due diligence, which is taken care by lawyers. Right? So these are the four due diligence. Of course, there's this new trend of ESG due diligence, which is also going on right now. But mostly, companies take care of these or do these three diligence before they invest into that. So yeah, hope I've answered that. I don't get your second question. Can you explain what is PWM, which you have mentioned in your last slide? What is PWM? Private wealth managers. Are you talking about that? Yeah. So in my last slide, I have spoken about. I've given couple of examples of private wealth managers that you can look at. I've just highlighted the top ones. There are lots and lots of wealth managers. There are a lot of boutique firms which are doing a good job in this. So I have written, maybe IFL, Anand Rathi, etc. There are many on the boutique side which are going the good jobs. So you can look at maybe a Serwin, which is great. Yeah, Sanctum, etc. How is recession going to impact financial companies' IT roles? Okay, this is difficult. I will try and sum up it in some way because I am not from IT, but what happened in the IT sector, and typically what happened into the IT sector after whole pandemic. There was this whole phenomenon where the top leaders of the IT industries moved on to this startup. There was this amazing valuation round, and there was loads and loads of money flowing into the market. Why? The biggest banker decided to give money to the market. Who's the biggest banker of the world? US Fed. So the US Fed decided that you're going to load the money, load the market, load the economies with money, right? So what happens when we have too much of free money? So instead of, let's assume your pocket money is $100, but one day your mother decides to give you $500. What would you end up doing? You would end up splurging that money, right? So this is essentially what happened. When there was too much money into the market, it went into companies, it went into startups. Now startups need people, right? So if you have an AI startup or a cybersecurity startup, they need people. And when startups are loaded with a lot of money, they would throw that money and get people into the market, right? This is exactly what happened in IT companies. And you saw a lot of these head honkos moving to these startups for lucrative packages, for equity valuations, etc. That's exactly reversing right now. So 2 years back, if you read any IT company, any big IT company like Infosys, TCS, etc., at most of their quarterly reports, they were worried on attrition, that the attrition rate is hiring, and maybe they're going to hire a lot of freshers and train them their way. If you read the latest reports by these companies, they're saying that the attrition rate is coming down. Why is it coming down now? Because the free money is no more there. The money is gone. The biggest banker decided no more money. Look, I am going to cut your spending on you. I'm going to cut down my balance sheet. I'm no more money in the market. What happens in that situation? Startups cannot pay your money anymore. So these head honkos, which left stable IT jobs to join startups, are coming back. So of course, your question was how will it impact? How is recession going to impact? See, recession is a fancy term which is spoken by many people. Everybody has their version of what is inflation, stagflation, recession is. What really is happening, we don't know. But the news says that the US numbers are going to be bad. So if you want to term it recession, so be it. It is recession. The IT companies, and specifically, I'll highlight the Indian IT companies. Attrition was the biggest issue that they faced. That is taken care of. Of course, the second advantage, which is not that broadly spoken, was the depreciation. So typically, IT companies benefit whenever there's a rupee depreciation. If rupee has to reverse from there, if dollar has to weaken from here, yes, they will face some challenges. But broad, with attrition, the biggest issue that these companies were facing was attrition, and which I believe is getting taken care of. So yeah, this is my piece of knowledge on the IT rules.
So anyone else, if wants to ask some question, can ask.
I have a question. Like you called P2P the next generation financing. Why so?
So tell me something. If so, I do you have Google Pay?
Yeah.
So if your mom is asking you to get you something, get something from the market, and you have, let's assume you have hard cash or hundreds, and that guy does not have chutta, which is easier to pay? If that guy is asking you to pay some 37, 38 rupees, and he does not have chutta, you do not have chutta, you will end up using Google Pay, assuming all these vendors nowadays have either Google Pay, Phone Pay, blah 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 blah. Right? So all of us are now so tech enabled that even if we have some cash, And if the vendor or the person who's asking money from us has an app, we're typically on our phone and we'll quickly, just kind of use that and pay that money and finish off it ASAP, right? Using cash, using credit card is just so much of hassle right now, right? And that's our generation. This is what things are going to be. Now tell me something. If you are an earning professional but you have a friend's bachelorette and you need a little amount of money, but you are pretty sure that mom's not gonna give it. What do? You just kind of, it's so easy to get money from P2P. You just need to upload your Aadhaar card, PAN card, and couple of KYC details, and set. That's it. So that Raksha Bandhan is out the at the corner. So maybe I'll make some money. Let me just quickly get this money from this platform directly into my bank account. Maybe in a minute, as low as 30 minutes to 1 hour is what they promise. And then let me repay back with my Raksha Bandhan money. Now that's just you. There are a lot of people doing this. So there are a lot of, so if you have a wedding down the corner and you really don't want to go to that relative and ask for money, but you would not go to a bank to ask for money, right? For a marriage, you need this easy money, but you still don't want to go to your friends or relatives because it's more, people still don't like taking money, and specifically just generation from friends. You just go on to a P2P platform, log on and take money. So look at the volumes of transaction that a P2P lender is doing. It's really caught up. You have payday loans. So what is a payday loan? 30th is where most of us get our salaries. But by 25th, what if you have an event coming? You need to buy a new dress. You just need money, and you'll be able to repay back on 30th. You have these payday loans which give you money, and you can repay them back on 30th. Now look at this. Even if you're taking a 3,000 from them, and they tell you that, look, we're going to only charge you say $50 or $100. On an absolute term, 50 or $100 look small, but look at it from a percentage point of view, right? Just for 2-3 days they are charging you that $50-100. I'm sure a couple of us are on Zomato and Swiggy and all. If you all have looked, there are systems like a simple lazy pay. They have these platforms enabled. If you don't pay their money on time, there is a larger penalty that they charge to you, right? So these guys make money from these small avenues. So whole point, I mean, just to cut this short, this generation is all on phone. If you need quick access to liquidity, P2P is something that is going to prosper for you.
Okay. Thank you. Before ending, let's have a poll now. Aditi?
I'll launch it 1 second.
Okay.
Thank you so much, Chanchal, for such a insightful and a very in-depth session today. You didn't touch just like the surface. You touched the depth of it, and I'm sure a lot of the members who were here today, they've benefited so much. So thank you so much for coming on our platform and giving us your time. It really
Pleasure
means
is all mine.
to us.
Happy to connect with all of you on LinkedIn. I do keep posting my stuff and my whatever little bit I know
right.
there. So yeah, stay connected.
Everyone here, Chanchal keeps on putting up very interesting posts related to finance. So do follow her on LinkedIn. I'll just share her LinkedIn link. Just a second.
I think Ritanya wants to say something.
Good evening, ma'am. I'm Ritanya here. Sorry to interrupt.
Hi.
I just have a question to Chanchal, ma'am. Actually, I am from, I have completed my undergraduation in BCom Honors, and I'm currently pursuing my CMA. So
Okay.
what do you think about this certifications called SAP, FICO, and financial modeling? Will that be an added advantage to my resume, ma'am?
So honestly, I'll be very honest with you. We worked on SAP during my audit days, and let me tell you, hand on my heart, I never understood that software. So I had a hard time understanding that. To cut it short, sorry, I don't understand that software, but that is one of the best softwares that you can know or understand. With this is what I broadly know. In fact, most of the global conglomerates use that software. So if the course is about learning how to use that software, that's going to be amazing, because not only on, so there are what you can either be on the audit side, because audit side, not many analysts, not many audit firms know this software, right? So that could be an added advantage where you say that, look, I know the software, I know how to extract information from the software. So if your question is, will that software be useful? Yes, it is very useful. Do I know what the software is? No, I don't know to use it. I had very difficult times using that time.
Thank you, ma'am. Your view on financial modeling.
You want to pursue financial modeling, then there are financial modeling courses, short-term courses that are taken care of, which take you broad level. So they will explain you on Excel how how to develop a model, how to update a model. So financial model is typically prepared by sell-side analysts, right? These courses are very good. I think, if I'm not wrong, there are a month and a half, 2 month courses, if I'm not getting it wrong, but they're very beautiful if you just want to understand the broad level modeling. If you want to get into the core of modeling, what is the logic behind using a particular cost of capital, what is the returns that you should use in bonds, then maybe I'll suggest you CFA. So you choose. If it is modeling, do these courses, 1-2 month courses, and you're good to go. Basically, in financial modeling, you just need to have a hand on your Excel, and these courses are awesome to explaining that.
Thanks a lot, ma'am. And I also aspire to become like a CFO, an analyst in finance. So what should I actually do after my CMA? Like, is there any tips for other courses that I have to excel in to get into such a big top level management?
Again, a difficult one. Maybe if you want to get into, so CFO is nothing but a manager, right? In the most layman terms, he is a leader, he is a manager. So if you can maybe work on your soft skills if there's something that you think that you need to sharpen. So you have to self-analyze that part. Being quirky with your numbers is something that would really help. So if you want to maybe pursue an MBA, I think I will, broadly to my head, it comes, it's that. Honestly, there's no educational qualification for us. So for a CFO, right? So it is largely soft skills. Your hang on the numbers, your hang on the business is what is most essential. But if at all you want me to name a course, I think I will suggest a management course. Yes.
Thanks a lot, ma'am. Thank you so much for extending your session.
Is there anyone else who has any question? Okay, then thank you so much once again, Chanchal. I've also linked Chanchal's LinkedIn profile here in the chat. So if you wish to connect with her or follow her articles, then please do that, because her articles are very insightful. And thank you so much for coming onto our platform. It really was great having you here.
No, in fact, thank you guys. Thanks, Aditi. Thanks, Ruchita. Thanks, Madhura. You all have developed an amazing, amazing platform. So kudos to you. Thanks for having me here. Thanks for spending time, and I look forward to interact with you much more.
See you again soon.
Thanks.
Thank you, Vaishnavi and Kushi, for a very beautiful moderation.
Thank you so much.
Thank you.